We are here to present on the April 1st, 2016 changes. But before we proceed to the April 1st, 2016 changes, I think it would kind of be remiss of us to not mention how we got here. So as a lot of you know, of course, National Flood Insurance Program was created in 1969 with the goals of preventing future loss of life and property and reducing public monies paid for flood losses. One of the major changes that happened along the road was the National Flood Insurance Reform Act of 1994, which basically said that if a structure is located in a special flood hazard area, A or B zones, insurance must be purchased with any federally assisted mortgage. So that was all fine and dandy until we had a few storms in 2004 and 2005, and especially Katrina, where $16.2 billion was paid out. And that's just by the National Flood Insurance Program. That's not all of the losses that were uninsured because of the economy of that part of the United States. And then, of course, Sandy, 2012, another $7.7 billion paid out. So, National Flood Insurance Program reacted with BiggertWaters Flood Insurance Reform Act of 2012. So, as I showed you, Katrina, Sandy, program was $24 billion in debt. What BiggertWaters did was it extended the program, but it also caused a lot of issues because of the reform that it was trying to propose. The desire was for premiums to reflect real flood or non-subsidized rates, but what that meant was that homeowners were going to see increases of around 25%. It required removing subsidies from commercial and secondary homes, and the results were huge premium increases, scared consumers, and the problem was we were just coming back from the downturn of 2008, 2009, 2010, and people are just now trying to move back into these houses that are foreclosed, and now they don't know what their flood premiums are going to be into the future. So you had the Homeowners Flood Insurance Affordability Act of 2014 that kind of calmed down some of the changes that were going to happen with BW12. Said it delayed the flood insurance increases under BiggertWaters 12, and it allowed homeowners to sell their homes and pass the subsidized premiums to the next homeowner. So if you have a pre-firm or house built prior to when the flood insurance rate maps were developed here, around here it's around 1974, they could transfer their pre-firm rates to the new home buyer. And it set a plan for rate increases, and FEMA was supposed to come up with a plan to make premiums more affordable and reassess maps. So that's what you see the next slide, which would be the April 1st, 2015 changes. These happened last year. It said that the individual policy premium increases would be capped at 18%. Now, we weren't seeing 18% increases across the board. You were seeing a lot less than that usually. It's just saying that's the max available before any annual surcharge and federal policy fee. There was also a reserve fund assessment, and one of the major things that we hear a lot of consumers and insureds talk to you about is this HFIAA surcharge. And what it is an additional $25 for every primary residence and then $250 for every other residence. So if you have a commercial structure or a secondary home, it's going to be $250. So people are seeing these whacks on both the premium increases and also the surcharges and fees. And then, of course, there's the federal policy fee increase, which was not too great, but there was also a new deductible option, which we've seen a lot of insureds try to go to, which was $10,000. So before the max was $5,000. This gives the insured kind of a higher option that a lot of mortgage companies are accepting now that helps them to lower their premiums if they want to take on more risk. So now what you guys are here to see is the changes that just occurred on April 1st. So there was 5 major changes. Again, you have premium increases, what everybody's concerned about, all the consumers are concerned about. More federal policy fee increases. There's some policy lapse rules, subsidy eliminations, and clear communications. And what I'm going to try to focus on is what I see on a day-to-day basis, which would be the premium increases, because I get complaints on premium increases. And I'm going to let Ashley talk about the policy lapse rules, subsidy elimination, and clear communications, because we don't see a lot of this going on as agents, but they are having a lot more work put on their hands by the National Flood Insurance Program because of it. Okay, so premium increases. So the average residential premium increase is 9%, and the average non-residential increase is 25%. So still, if you have those secondary homes, you're still seeing a large increase. Of course, this is going to vary based on your flood zone, year built, pre-firm, post-firm, and the property type. Flood zones and their average premium increases. So you can see here, I don't want to get into it too heavily, but I will focus on the AE and A1 through A30 zones, which are what most of the properties in the coastal counties are. You'll see the pre-firm rates are increasing on average about 5%, post-firm 9%. People keep on asking why post-firm increases are seen higher. It's because those premiums are so much lower. You're seeing a 9% increase on an $800 policy. It's only, it's a little bit, it doesn't make much sense, but you have a $3,000 pre-firm policy at 5% is a lot larger of an increase. And then, of course, these increases, again, do not take into consideration the probation surcharge, federal policy fee, and or the HFIA surcharge. Then the federal policy fee, and then just so you can understand what this actually is it's a flat charge that each policyholder pays to pay for NFIP administrative expenses. And of course, there's a lot more admin expenses going on right now because it's being criticized. Increases are being seen for all property types. Your standard rated policies, so your typical pre-firm policies going from $45 to $50. And then condos, this is the RCBAP, Residential Condominium Building Association policies. 1 unit, you're seeing 5 increase. Biggest ones are the 21 plus units, $200 increase, but of course they can spread that out across all their units. Now, Ashley, you want to take over?
Thank you, Brian. So I get the fun stuff. Okay, so I'm going to be talking about this new lapse policy rule and subsidized policies. So Brian talked about BiggertWaters, and that is actually a really good place to start because that's what caused all of this to happen. So when BiggertWaters hit, I want you to imagine the flood, pun intended, of calls that comes into the insurance company, the insurance agency, news outlets, senators, congressmen, everybody got a phone call. It was on the news. It was the hot topic of discussion. That's where the Homeowners Flood Insurance Affordability Act came in. It reduced all the subsidies, but there's still this big debt it has to be paid. So there's also parts of this bill that are in there that say, if you choose to leave the NFIP program and you come back and you are required, you are not eligible for a subsidy. So that had to be implemented, and that's where this is coming into play. All right, so we have 2 types of lapses that can possibly occur into a flood policy. One is a 30-day wait, is when you're paid after 30 days. The other is when you're paying after 90 days. So we're going to talk about the 90-day one first. So let's say I did not pay my policy for over 90 days and I was required. And I have an example here. And for this situation, if you are pre-firm, you are suddenly going to be required to submit an elevation certificate with that rate, with that policy, so that we can use the elevation certificate to rate the file. If I have a policy that was effective in January, the premium for pre-firm would have been around $3,300. The insured doesn't pay in January. The bank force places a policy through non-NFIP. In about April, the insured's like, this is really expensive. I'm going to go get my own policy. They come back to the NFIP. We're kind of going, you need that elevation certificate now. They live in Tanglewood. Their base flood in that area is 9 feet. Elevation certificate shows the non-elevated home has a lowest floor at 7, so they're 2 feet below the base flood. Their $3,300 premium has now increased to $5,759. This is over 75% of an increase of what they previously were paying. That is the concern that we have when there is a lapse in coverage, and this is really what we're trying to.
And the thing is, that's only a -2 elevation difference.
Yes.
So what happens when you have a -5, -6, -7? It can be a lot more substantial.
These are and this is actually a very real scenario. This is Tanglewood in Pinellas County, very local here. So, but there are some exceptions to this rule. So if you are a brand new homeowner and you have a pre-firm property, you are able to be eligible for that pre-firm rate still. In addition, if you had paid off your loan, so you were no longer required to have flood insurance, you would be then eligible to maintain those pre-firm rates because you never violated the mandatory purchase requirement. Now, the other types of lapse is a 30 days. So you pay it after 30 days, but within that 90-day period. What happens to your flood policy is we give you a lapse in coverage. We amend the effective date based 30 days from the date we get the payment. Once that happens, normally we would re-underwrite your file. Now we don't. We're going to let everything stay the way it is as long as that is the only lapse that we have. And that means good information. So if you're pre-firm, you get to keep those pre-firm rates. If you are grandfathered in any way, you get to keep that grandfathering. So which is really good for us. We don't have to re-underwrite a file. We're excited and happy about it. If it happens a second time, then we have to go to re-underwrite the file. If you're pre-firm, we're going to need that elevation certificate, and we're back in the same situation. That is, there are some changes that came in with the October package, and that did confirm that if we have one lapse and we have a new property owner and a policy assumption, it would still stay with that policy. So it can only happen one time per policy.
So that's saying there, regardless of ownership changes, that one lapse rule can only occur once. So
Yes.
a prior owner lapsed their policy, new person buys the house, they try to lapse the policy once and they think they're going to get the 30-day lapse rule, ain't going to happen.
No.
So
All right, so
it applies to the property, not to the insured.
exactly. Exactly. It does apply to the property and not to
And
the
that was
insured.
kind of cleared up
That
with the
was
October 1st
cleared
changes,
up with
correct?
the October changes. Although I will tell you, we have some amazing people at Right Flood that really do go and talk to the rule makers at FEMA and they're really seriously arguing this rule, because if you have a new owner, quite honestly, they qualify for, they were a new owner, they didn't have a lapse. So
It's kind
we're
of on the same
arguing
side.
it.
There's a lot of people that think that they shouldn't be responsible for the prior
Yes.
owner's problems.
they do.
If I'm buying a house, I would not know if that person lapsed a policy.
Yes, they will now. The part of the October change package also has changes to the deck page, which will include the original new business effective date and the reinstatement date. If those two dates are ever different, that means a prior lapse has occurred and that you should be aware that their lapse has occurred. And that was really very important to us too, because as a write your own company accepting new business from another carrier, we have to know whether or not that lapse occurred. As an agent, acquiring new business from a customer, you have to know. That insured has to know. And that deck page is really the only way of transmitting that information. All right, so this is part of, again, the subsidy elimination. So over 90 days, not receiving a payment means, and you're pre-firm, the subsidy is going to be going away. We're not going to have that subsidy there for you anymore, especially if you were required. And that was my initial example. January policy paid $3,300. -2 elevation after April. Now you are going to be over 5,000. So. All right, clear?
I want to go back to that
Yes.
one part before that. This is another thing that we're seeing as agents that I kind of want to bring up here. So it says the property covered by a non-NFIP policy purchased in the private market for a period longer than 120 days after NFIP coverage has expired is considered to have lapsed from the NFIP, thus losing the ability to return to the NFIP at the subsidized rate. So you have an insured that says April 1st, I'm choosing to go to Lloyd's of London, Tip Tap, Homeowners Choice, any other private market carrier. 120 days later, that carrier decides that this isn't profitable because, say, we have a hurricane in the state of Florida and they're in business to make a profit. They find that flood is non-profitable for them. They decide to pull out. Guess what? That person has to go back to the NFIP because it's the last place. And right now, they would lose their subsidy if they were pre-firm. They'd have to get an elevation certificate. Premiums are going to be a lot higher. And there's a lot of agents out there that are selling these private market policies because they're saving insureds a few $100, but they're not kind of giving them the whole background of the story about what the risk is about that you're taking before you're saving a few $100.
Now, I
And
will add to that, has been something that went through Congress.
It's going to
which,
pass, probably.
Yeah, which is probably going to pass. It has gone through Congress where it's going flood coverage, and it's not specifying NFIP coverage. And once that goes through the Senate and it does get signed, then obviously we would have to change that rule. But that is the rule for right now. So if that happened in the interim, that insured would be subject to the full risk rates.
It's called the Flood Market Parity Act. So yeah, I know it passed the House with like sweep the House, and now it's like sitting in committees. So I would pay close attention to that because that will drastically change things.
Yes. All right, so clear communications this was not part of BW12. This was actually part of HFIAA. And again, going back to the flood of calls, imagine here you are, a congressman, a senator, and you have passed this flood bill, and you think it's been great, and then you're suddenly getting these phone calls. And these phone calls are something to the effect of, I don't even need flood insurance, and my rates have been tripled. I don't understand what's going on. This is crazy. So it was a lot of information, and one of the things that the senators and congressmen shared was these policyholders don't even understand that they truly are at risk. They don't know their risk. And when you think about the fact that we have these programs in the flood market that keep premiums so artificially low, we have a situation where you change to a higher risk zone. We are going to put you in a program where your rates are 3 times lower than what you should be paying, even as a subsidized rate. You're 3 times lower than the subsidized rate of $3,300 because you're now in a special flood hazard area. There is a program for that. So because these rates are kept so low and for so long, you don't equate that there's true risk. When you are driving a car, if you have lots of moving violations, your auto rates go up because your risk has gone up. So you equate the premium with your risk. If you don't live close to a fire station, your homeowner's rates are going to go up. So this risk is equated with your premium. When your flood premiums have been kept artificially low for so long, there is a perception that there is no risk, and it's not that case. You've just been subsidized. So part of clear communications is to explain the true risk that customers and policyholders are actually experiencing. This started with, we just need to know what is your flood zone. What is your current risk? That was not a mandatory requirement in flood, which is shocking, quite honestly.
It is.
Yes. It's flood insurance. Okay, so we're now going to require that the current zone be validated. And if you're not using that current zone, why? Are you grandfathering? And so that's how the rating is going to be. I will tell you at Right Flood, we always did this, right? Because we're kind of sticklers. All right, so now new business, not so problem. Renewals, there are a ton. There are a lot of policies that are existing. Right Flood may be the largest provider, but there are a lot of other write your own companies out there, and there's a lot of flood policies out there. And these renewals all need to be reviewed. And if you keep in mind that some of these policies have been around for well over 20 years, there's a lot of changes that have happened in the 20 years of that policy that people are probably not aware of. So initially, FEMA said all renewals after October. And the write your own companies talked to FEMA, and FEMA heard our input, and they made a change. We were very grateful for that. So now we're going to go into phases. And the first phase is we're going to have policies that are pre-firm and subsidized. These are going to be reviewed first. These are policies that are not with an elevation certificate. They were constructed prior to December 31st, 1974, and are in a zone beginning with the letter A or V. These are going to get reviewed. The next group are standard X zones. These are policies that are not eligible for the preferred program or were not placed in the preferred program. So this could be that they're a condo association. It could be that they have a loss history that doesn't qualify, or it could be that they're grandfathered. Then all our preferred policies, so properties currently in the B, C, and X zone and qualify for the loss history. And then all the policies in the newly mapped procedure. So these are policies that have been impacted by a recent map change where the zone changed from B, C, X, or D into a zone with the letter A or V, and also qualify on map history. So Pinellas County, actually Kansas City had a map change that would have qualified for this. And there's a limited time that you can purchase one of these policies. We're also going to be having another map change coming up in August. So hopefully, if there's more identified, more people will be purchasing flood policies within this community or within that program, because it is a really, really amazing offer. It's like, buy now, buy now. Okay, so loss history. For preferred newly mapped, 2 losses over $1,000 in a 10-year period, or 3 or more losses of any amount within a 10-year period. Now that is within any 10-year period. Those losses don't go away, they don't fall off, and it is on the history of that building. So again, even if I sell my building to Brian, and I had prior losses, Brian acquired my losses. Yay.
Take on responsibility.
All right. Anybody else? They're going to get reviewed the following year in 2017. Now, there are a couple policies that are just absolutely not going to get reviewed. These are mortgage portfolio policies, provisional and tentative rated policies, and group flood policies. Now, mortgage portfolio policies, these are required by the lender to be rated on the current map, and because of their federal regulation, they're going to follow their guidelines, so we're not worried. The tentative and provisional rated policies, they only last 1 year. And again, those are based on the current map, so we're not worried about those. And then group policies are only offered by FEMA, and they're for a community that had a disaster, presidentially declared disaster. And they're 3-year policies, so they usually move in. So for the most part, so once these reviews are done, let me tell you what's happening here. This isn't as easy as a process as it probably seems.
Or as I put on the slide.
Yeah. Because what's happening is, let's say we have a policy and it's rated in the zone X, and we get our flood zone and it says, nope, you're actually an AE. Okay, are you an AE because you should be grandfathered? So have you had this policy long enough to where you could be grandfathered? Nope, you haven't. You were misrated. I need to correct your zone, and I need to notify you and the agent that at renewal, there's probably going to be an additional premium. If you're post-firm, I might need an elevation certificate. So it's a lot of different information that's being verified, that those are the times that we're going to have to reach out to the agents and to the policyholders to let them know.
There's a lot more back-end work,
Yes.
essentially.
Now, it can go the other way. Let's say you were also rated in the standard X, but your agent didn't offer you a preferred policy. We get it. We see that you actually were eligible for preferred. This is a much lower premium. Hey, we are going to correct your policy, not only that term, but for 5 years prior as well, which is brand new, super excited about it, and we're going to send that off to you and do for your renewal as well. So this is a great opportunity where if you were not in the correct zone for some reason, or you were not in the correct program, we are going to move you into the better program and get you your refund. So this is good. Okay, so again, all of this is internal, and it's until we contact you, do we need anything? And once that's done, essentially, FEMA's going to use all that information to notify policyholders what their true risk is. So it's probably going to be 2018 or so before FEMA gets around. And from there, they'll be able to start saying, okay, you are actually in a special flood hazard area. This is why it's very important for you to have flood insurance and to go for that. I think that's all I have.
I think that's all with the
Yeah.
changes that we have. So
Yes.
I put our contact information up here. If there's any questions that you guys have, we welcome right now.
There was, under whether it was BiggertWaters or the one thereafter, it was supposed to be that FEMA was supposed to determine what the actual risk was.
The actuarial
Policy,
rates.
so that while it's climbing at some percentage a year, you knew when it was going to top out. Has that actually been completed?
There's been a lot of, like people like Jeff Brandis have asked for that stuff to be put out. The actuarial data has not been put out, but I mean, you're not going to determine what a pre-firm's policy real risk rate is until you get an elevation certificate. And a lot of people don't want to pay, you know, $300 to $500 for an elevation certificate to find out their full risk rate. So,
I just want to add in that if you are pre-firm and we have maps changing very soon, go ahead and get your elevation certificate and submit it to your company. Because at least then we can use this current BFE. If your BFE changes and it's worse, we're going to have to use that newer BFE when you submit that elevation certificate. So the sooner you get it to us, this is where it stops. And it's a very difficult process, I understand, but if you're going to go through a map change, I recommend getting the elevation certificate ahead of time just to prove what your current BFE is.
I think Paula's question was that as part of the BiggertWaters, it was written in there that FEMA would do an economic analysis of kind of the entire NFIP before they started raising rates, and that wasn't
I think
done.
that the problem was that they were so far down in debt and they needed to continue the program. So this is kind of a intermediary program to continue the program and continue funding to it while they come up with a better plan. Hate to say it, but that's the national government for you. It happens.
Floodplain manager, it's difficult to describe to, you know, the residents, et cetera, that your, you know, anticipate your flood insurance is going to go up X percentage each year, but you don't know when
You
it's
don't know
going
the
to
cap.
stop
And it's
increasing.
it's difficult for real estate agents, it's difficult for insurance agents, because I want to tell the person what your rate's going to be next year, but I'm guessing at the unknown because we have to wait to see what's going to happen. I mean, in my personal opinion, there's going to get to a point where rates are going to increase so high that private market carriers start coming into
Yes.
the game. And then that's going to kind of be where it levels out. But until we get to that point, we don't know.
Thank you so much.